Welcome to our eSignal Weekly Forex and Gold Forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. Here's a good quote from Bill Williams that reminds us to stay focused on what the market is telling us to do. Great quote from Bill. All we need from the market is for it to provide us signals so we can take the appropriate action. That's my good friend, Dr. Bill Williams. First market we're going to cover will be the Australian US dollar. Here's the Aussie US dollar. You know, we talked last week how we suspected that this correction that it started here with that change of direction right there. We suspected that had a little bit further to go. Sure enough, you had some good downside. Short-term traders would have had a pretty good week selling rallies here. We'll give you a downside target for this overall move here, and we're going to base that on the first rally right here. Okay, so we're going to take that low to high, and we're going to take our retracement tool, and we're going to see how far that retracement went. And you can see it stopped somewhere between the 382 and the 50%. The gold line's the 382, the purple line's the 50%. So you stopped right around 89 even, right around 89. The figure somewhere right between that 382 and that 50%. So we're going to take that same retracement level up and we're going to march it up. There we go. We're going to take the low to high. We're going to take the March low to the April high, and we're going to draw that same retracement. And we would anticipate a move similar in depth to that one, and somewhere right around between 382 and 50%. And then you got the 92 figure. So 92, the figure, will likely be pretty good support here. You know, what's nice about this retracements, what's great about retracements, by the way, is that regardless of the volatility in the market, regardless of the volume in the market, regardless of how slow moving or how fast moving a market is, the one thing I guarantee you that does not change is the ratio of these retracements. Likewise, the ratio of those extensions too. That's how markets move. That ratio tends to not change, okay? That's very, very important to us. It lends a bit of predictability to the market. So that's why we like 92, even 92, the figure in the Aussie dollar. We can anticipate some support there. But you're a ways away from it now. You're 92.75 or so. So as a short-term trader, there's still a bit of room down below. So we still favor selling rallies shorter term in the Australian US dollar. Now, just because I say there's support at 92 even, you don't stick your head on the chopping block just because it gets there and buy some. You need to see the market so in support. You need to see a shift in momentum before you consider the long side, before you would consider that this secondary move possibly has another leg higher, right? Next market would be the dollar Swiss. And for our money, you really need to get to resistance 89.5 here. But you've got to watch this guy now because it put in a higher low here. Watch for another higher low. If you get a higher low and that market sows in support, shifts momentum higher, you really have to watch this guy. I'll show you why. See that trend line right there, that black trend line? When I pop out to a weekly, that's a pretty big trend line. I see that if you can break this trend line, meaning if you saw enough dollar strength to reverse the chief dollar Swiss higher, Swiss lower, euro lower, if you have enough strength to take that out, I think you'd see a rally akin to what you saw in 2013. Now, this was a 750 pip move. That's a big rally from low to high. I think you see a similar move now if you have enough juice to reverse the dollar higher. So, a 700, 800 pip move from these levels, that'd be a big move. That'd be a mini bull market. Well, whatever you want to call it, correction of a secondary move or a 3 or 4 month move, it'd be a big bull move. So we have to watch that. But it's not going to happen unless you start to sow in higher lows and then put in higher highs, right? The only way you're going to take out this resistance is a higher high, right? So definitely watch the pattern in the market. Again, what Bill said, we just rely on the market to provide us signals, okay? We're not here to figure out what the market's going to do next. We're here to follow the market. Next market, interesting market, is the dollar index too. A dollar index, a lot more of a respectable trading vehicle than it was just a couple of years ago. Good volume flowing through here. A lot of currency traders migrating here. They like that $5 tick on the full contract too. And here's the dollar index. And it's not much to see on a daily chart. If anything, you're sideways. we used to warn our clients, beware of sideways markets. Now we know we can just scroll down to the lower time frames and generally find something to do, because as I said before, the one thing that remains constant in markets is those ratios of the retracements and the extensions. Regardless of low volatility, high volatility, those ratios remain constant, and that's our best friend as traders who respect pattern recognition techniques. This chart really gets exciting when you pull out to a weekly chart, because, for all the disappointment that dollar bulls have had because this market can't show strength, it's not showing weakness either. It's been holding support. You go all the way back to 2012, and you can see it's holding these levels. And if anything, a very, very subtle pattern of higher low, higher low, higher low. So this is definitely a guy to watch. And likewise, if the Swiss franc can take out that trend line, and the dollar index can take out its trend line, you could see a pretty big move higher in this market. But it's not going to do it until it's got to make a higher high to that April 22nd high. Then it's got to make a higher high to the April 4th high. So the pattern's going to tell us. And I always love to pull out to this monthly chart in the dollar index too, just to give you scale of this guy. Look at that massive bear market that's been in place since '02. So 12, 13 years later, you're at the other end of the spectrum. You're waiting for a potential breakout on the upside. So no matter how you cut it, when you look at these long-term charts, this is a monthly chart. I'll back down to weekly chart again. This is a bullish chart because you're holding support. And if you take out that resistance, look out on the upside here. X market, the euro, this is going to be the mirror opposite of it. If we're looking for a potential bottom in the dollar, you'd be looking for a potential top in the euro, and we think you have it. You could see the momentum here continues to wane, where each rally up happens to be smaller and smaller in scale, and we would see that as a divergence, negative divergence. Here you can see that actually on the MACD, where the MACD continues to make lower highs, telling us that the momentum is run out of steam on this weekly chart. I'm gonna go the opposite direction. I'm gonna pop down to a 4-hour chart, and I'm gonna plug in the volume, and you can see that the volume has been lower and lower on each successive rally. Now that can get you in trouble as a trader. You don't want to trade that volume. I think you have to be very careful of teaching volume, likewise learning about volume, because it's a tricky subject. Volume doesn't cost you money. Being on the wrong side of the market is what costs you money. So it's tricky just because they're here. You can really see it. Here's what I want you to see. Pretty good volume on the way up in late 2013 and December. Yeah, late 2013. You had pretty strong volume on the rally. Now look at this anemic volume on this rally here. Volume's at the bottom of the chart, by the way. So you had good volume on the way up in December, really good volume on the way down. Also in January, I think a lot of traders anticipated a reversal in that market based on a pretty powerful seasonal. And you got it, at least shorter term, good volume. But what happened on this last leg up? The volume just dried up. There was no volume. And likewise, this leg here too, if you look at it a little bit shorter term, market started picking up volume on the way down here. The volume started upticking. And then you had this rally here, and then the volume dropped off again. Look at that big shelf in the volume. So professional traders, longer-term traders, aren't participating in these rallies. That's a long-term event. It's showing potential long-term weakness. Now, you have to be very careful about trading that. You got to be. The last thing you want to do is picking tops, because believe me, you'll go broke before that top will be in. Okay, so just wait for the market to tell us what to do. There's no sense me getting excited about any kind of sell signals yet until at the very least this 137.50 level plays out. Okay, if you can get below that, then you're going to get below that trend line. Then it gets interesting. Now, if you take out 36.50, then I can hold longer term positions short too. For now, I'm still buying dips though. It's still a bull market, okay, but it bears watching, right? That's what Bill means when we're not going to anticipate what the market's going to do. We're going to let the market do what it's going to do first. So for now, we're still buying dips in the euro. Similar, still selling rallies in the dollar Swiss. Watching the dollar index too is a good short-term trading vehicle, but nothing to do yet as far as potentially a big reversal. Next market, the gold. Gold's tricky. Commodities are always tricky. Gold, of course, being the oldest currency, but at the same time, there's no yield to it. No one's going to pay you to store it like they would money. In fact, they're going to charge you to store it. But gold's holding up okay. You have a nice big double bottom in the zone here. You know, as long as you're in a zone, you have to focus on buy signals. I should say, as long as you're in a buy zone, you tend to want to focus on buy signals here in the gold. So 1260, a big level in the gold. You'd want to see that hold. Last market to be the dollar yen. Dollar yen, it's a confusing market to me. I don't like sideways markets. And even if you go out to a weekly chart, you don't get a lot of definition here. If I'm a gambling man, which I'm not, I would think that you break out on the upside here in sympathy with any big move in the dollar index and the euro, etc. But you know, that's just taking a stab here. Don't like it. It's a sideways market. I think there'll be much better trading activity in the euro and the dollar index, etc. Hey, thank you so much for being with us. Again, my name is Jay Norris. I teach trading at Trading University, and we'll catch up with you next time.